Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 18th of June in 2020. And like that old Aerosmith song, we are living on the edge. Well, maybe not we, but the S&P. What's the edge? Number one, it's about the 3100 level, which is 3100. It's a roundy, right there. That was your, let me sneak that into the intraday chart. That was a key pivot in today's session of a range day. There's your 3100, and the market chopped up above, down beneath, up above, and everything else in between, but never made any progress. The yellow line that you're seeing for intraday traders, but also swing traders, that's going to be our volume profile level. It is the lower edge of the value area extreme, and that's just simply a distribution table. This is not a bell curve. The Nasdaq is, but not the S&P. But the market's living on the edge of the value area extreme, also 3100. Remember, when the market's above or into this yellow line, and what's the yellow line? Volume profile, 1 standard deviation. That means there's an edge to go short above and an edge to go long beneath. But what happens when you're at or sitting right on that 1 standard deviation print? I'd say there's no edge. It's a crapshoot. It's 50-50. Whether or not the market breaks strongly to the upside, that would target out this red line and play through what we call a pocket or an open air zone. Just looking back here, we can see that not a lot of price action took place. That is, if you're a bullish or have bullish type of spreads or call positions on, that's what you want to see on Friday, which, by the way, is a big option expiration day. So we are going to see volatility. Maybe see strikes pin, but volatility will creep back in the market in a big way. That's because the principle that markets rotate or change or shift through range contraction or consolidation, and then range expansion. And we call those trending moves. So we've had a trend down, trend up, and the last Tuesday, Wednesday, Thursday has been flat at the VA extreme. The Nasdaq, I think, looks a little bit better because it shows more of a normal distribution. This is outside. We don't call it a weekly expected move. We'll come to that in a second, but this is your value area extreme on the volume profile. That means, again, advantage bears, advantage short sell trades here and down beneath the yellow standard deviation, advantage bulls. And the target tends to be the red spot or the point of control. That's been achieved. Not only has it been achieved, but it's like a magnet that's pulled the Nasdaq right back into it. Keep in mind that's about the 10,000 print, which sounds weird, I know, but that's the 10,000 print on the Nasdaq. And as we push back to here, same thing, chop, chop, chop. Didn't quite form a magnet. The magnet actually is about 9970, 9975 for the Nasdaq traders. Nonetheless, it still remains in a trading range. So that's the picture for the equity futures. Speaking of the expected move, we can look at the SPX. Don highlighted this as well. The market skirted. This is actually the SPX move here. This is your auto expected move. They are a little bit different. Skirted to the edge of the expected move and then pulled back in. So that's another, strangely enough, another edge that the market is living on. That is your SPX. Same with the S&P, right? That's again the auto expected move. The Nasdaq is just a little bit above the weekly expected move, and that does have a little downside edge. The Dow is above and came back within, and that's what the probability would state. If you're above the expected move, you probably come back in, but sometimes the market goes out and trends outside. Those are outlier events. Those are things that are enemies of probability, and those create trend days on the intraday market, similar to what happened in PayPal in today's session. Going back in time, last few weeks, 1 week, 2 week, 3 week, 4, 5 in a row, you had a edge of the expected move, come back in. Pierce the expected move, come back in. Edge of the expected move, come back in. It just basically, from a probability standpoint, you do want to try to short or take profits into the weekly expected move, and that's just option volatility. Implied volatility spread out for a weekly basis, but sometimes things go wrong. Sometimes a probability, well, it's not probability. It's not a failure in any sense of the word. It's just sometimes the dice don't come up your way. And the breakouts are what cause or create trend days. So we're watching this closely for the S&P and the market itself. Now there's two little spots. The weekly expected move is just a little bit above. And so if we pierce above that, but also the value area extreme is here. So it's sort of compressed, kind of between a rock and a hard place. Back to PayPal. When something moves outside, think of the value area extreme here, that can create trend days and opportunities for us on the intraday trading frame. But again, that is the enemy of fade or mean reversion tactics. Speaking of PayPal, these are the stocks making new all-time, some of them at least, but they're making new 52-week highs. And I continue to focus on these as strong stocks getting stronger. That should be bought, at least from a intraday or very, very, very short-term time frame. That which is strong does tend to get stronger. That which is making new 52-week highs, and it's not that long of a time frame for PayPal. It's actually a relatively new stock. But each new high from about 120 per share all the way to 170 is a new 52-week high. So remember, these things tend to keep showing up in our new yearly high list. They are inherent bull type of candidates. And T-Mobile, T-Mobile shares, same thing. Always cross-check if you're looking to put on spreads with these. Are these all-time highs or just new 52-week highs? They are new 52-week highs, but are they new all-time highs? So anyway, the same principle applies. Each time this goes up, that's going to generate or trigger or give our scan a new 52-week high signal. And those I prefer or would recommend to buy on pullbacks. Where to? The rising 20-day moving average with the option calls or option spreads. That way you don't have to worry about stops. And we target the prior high or a little bit beyond. PayPal notwithstanding. That's just a big stock, strong stock getting stronger that creates additional trend days for intraday traders. Adobe, we saw it earlier in the week, relentless to the upside. That alone, we'll go to the 5-minute chart, was a trend day in today's session. Trend days start with big gaps that are not filled, and they continue going higher. Clorox, do y'all remember when we were talking about the initial coronavirus information here, when the market was falling apart? There were stocks to get long, and there were stocks to play, at least for a risk management standpoint. Clorox was one of them. And we've been talking about this in a video here. It's a boring stock. Nothing sexy or fun about Clorox, but it made money, and the logic is sound, just like Netflix. That's a more sexy stock. That's a more fun one. We can talk about Netflix. If people are quarantined at home, they're going to watch their favorite TV shows or Netflix shows or Netflix movies, and if they don't have subscriptions, maybe they'll subscribe to Netflix. Well, that was a good stock that kept getting stronger, sort of stalled out a little bit, strangely enough, as the economy does recover. Well, people go back to work. Netflix might not be as appealing. Well, we'll see. But the shares are at those near just shortly under the all-time highs. And it still is a strong stock getting stronger. Back to Clorox. Boring, cleaning stock. But strong stocks that get stronger, they give us opportunities. And again, we manage risk with spreads, call spreads, and we do so with pullbacks or retracements. And if you are an intraday trader, stocks that break to new all-time highs, and they tend to do it frequently, can give you intraday, trend day opportunities. And we just want to buy the pullbacks on those. A couple more. Here's Electronic Arts. That came up a couple of sessions ago. That was a new 52-week high, and it did it again. So EA, I always say EA Sports, but EA Electronic Arts, games and video games and sports, they continue to get stronger. And Tractor Supply. Might not be a stock you're familiar with, but it's a strong stock getting stronger. We don't always have to know the reason. Could be good management, could be good sector performance, could be any number of reasons why a stock gets stronger. But as a trader, we use that to our advantage to get long or trade in the direction of these trends as they develop and unfold. But of course, we'll end the video talking back to the market here. Friday may be a very big day for the market, and we can take a look at our expected move chart for a couple of things. You can always do this on individual stocks or individual positions that you're looking at. So for the S&P futures, by the way, roll them if you got them. So there's 1 day out in that M contract. You should probably be in the U already, but if you're not, heads up, the S&P futures and all the other futures there will be rolling to this upcoming contract. So it is a ESU to O, and the statistics are right here. Back to the volatility. Implied volatility stands about 18%. This is a 1 day. This is Friday, big expiration day. So don't count that out. 31 points, almost 32 up or 32 down for the SPX. Don highlighted this in last night's video. It was down from about 60, and we'll see the new updated stat for the SPX. Takes a while for the tables to load. There we are. So looking at the Friday, that's 1 day away. The expected move here, we'll go ahead and open that up. It's going to be 42. It's almost 43. That's positive or negative, up or down. 25% implied volatility. If you are interested in trading a particular product, maybe PayPal or something else like that, you'll be able to see your own stock's expected move for the next option expiration session. So that's Friday. You'll always be able to see the statistics and, of course, the option chain. Lots of information comes from here, but mainly our expected move. That's for the next session, up or down. So it is likely to be volatile. There is likely to be range expansion. And these series of range days in a row probably won't happen on Friday. Be ready for volatility. Living on the edge will fall or soar one way or the other. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video for June 18th, 2020.